Hi friends, welcome back. So if you're looking for Tesla stock drama, you've come to the right place. Elon Musk and the team had their earnings call yesterday, and Wall Street already has their price targets. I want to go over this stuff and the details of why they say what they say, and let's jump right in. So this is it right here. You have multiple holds, so I count 1, 2, 3, 4, 5 holds on the stock. You have 1, 2, 3, 4 buys in the stock and 1 sell rating. There's a bunch of other ones that'll probably be forthcoming, but all of these just came out today. So essentially, Wall Street is sort of, placing their bets where they think it could go. Basically, the low end is be 120. I think there's some that are even lower than that, but these are just the ones coming out today. But I say the low end is 120. That's coming from Bernstein. And then the high end, probably Morgan. Yeah, it is Morgan Stanley. Morgan Stanley is at 310, and also Piper Sandler is also at 310. Morgan Stanley, actually, Elon Musk owes a lot of money to them on the Twitter deal, so they need to keep pumping up the stock as much as they can. One thing I will mention on this thing, and it's very important. And guys, we have this. This is breaking news, just a filing with the SEC. The current Tesla CFO, the chief financial officer, the one who would know the company's financials the best, is exercising options and selling stock. So that's right, the Tesla CFO is selling stock. Here's the filing right here. You can take a look at it for yourself. Plus, the prior CFO already resigned. So this is the new CFO is selling stock. The prior CFO resigned. I'll let you be the judge of that, but to me, not a good look. In the earnings call, Tesla, Elon Musk, and the team only took 2 questions from Wall Street analysts. So I'd be willing to bet that all these people here that gave their rating, that they're on the call, had a question, something they wanted to know, some sort of discrepancy in the numbers they wanted to ask about, but they weren't allowed to. Again, there were only 2 questions out of all the analysts that they took a question from. I thought that was really strange. They said goodbye, and that was it. So this is sort of why I'm going through the numbers with you guys, or I should say the numbers and what they say. So this is from Bank of America, John Murphy. He says, looking ahead, Tesla is poised for continued growth with management projecting a substantial increase in unit volume by 2025, alongside new product launches like the Cybertruck and public ride-hailing app. The company is also ramping up production capabilities, including energy and storage solutions from its Shanghai factory, which is expecting to significantly boost revenue. These developments underpin Murphy's confidence, right? So that'd be from Bank of America, and he's given a buy rating. Then you got, and I'm going to go through these. Then you got Truist Securities. This is William Stein. According to him, Tesla's call proved vague, right? There were several items we could highlight as imperfect in the quarter, but they're much less important than many unanswered questions. For example, Tesla has never delivered a new vehicle less than 1 year after revealing it, right? So that's a pretty funny point, because Elon Musk is saying that the Cybercab is going to come out, like in 6 months, but they've never put out a car, right? A new car less than 1 year. Also says, with no new cars revealed recently other than the Cybercab and Cybervan, what can we expect Tesla to deliver in the first half of 2025 that will be responsible for the 20 to 30% unit growth, right? So that's what Elon Musk said, 20 to 30% growth. But he's saying, like, this is from Truist, saying like, when you introduce a new product, it usually takes well over a year to get that out. So where are you going to grow? Where's that going to come from? Also says here, what's more, if the answer to that question is 20% cost reduced Model 3 or Y, right? Make cheaper cars of what you already make now, the 3 and the Y. Stein wondered if that would prove to be empty calories or growth that's not meaningful because of its financial profile, as a hold rating on the stock. Then you got Stefan Gengaro from Stefan Nicholas. Like I said, I'll go through all these, and they're all over the map. So that's why it's fun to hear the different points of view. Tesla's earnings per share were notably higher than anticipated, highlighting the company's strong profitability, right? They make money. Further, Tesla's energy generation and storage segment showed robust growth, contributing positively to overall financial results. So it is true that their energy grew this year from last year, but it was down from last quarter. So just understand that. Also says here, the company is also making significant progress in its full self-driving technology and plans to introduce lower price vehicles in the first half of 2025, which are expected to expand its addressable market. While some concerns remain regarding the average selling prices, right? So average selling prices went down. That was in their earnings report. of its models due to increased competition, right? The amount of money that you sell your cars for, the average is going down because you have to compete with your competitors, right? Increased competition. Gangaro believes that Tesla's strategic positioning and innovation in autonomous driving and energy solutions will continue to drive stock value upwards. So they like the stock. This is a Potter over at Piper Sandler. They say Tesla disclosed more information than usual, particularly regarding the 2025 outlook, while reiterating plans for a new vehicle in the first half of 2025. Elon Musk predicted 20 to 30% delivery growth in 2025, thanks partially to its new product. Even if his outlook proves optimistic, there's room for upside versus our current expectations. So this guy's like, wow, Elon Musk is 20 to 30% growth, but they could even do more. So they're obviously and then was it Piper Sandler and Morgan Stanley, the big pumpers. So this is Piper Sandler, which is one of them, or very positive, however you want to say it. They also say here, admittedly, there's still information that Potter wants, including about how self-driving software contributes to Tesla's financials, right? So it's questions like, okay, you got this FSD stuff. Give us some more details of like the breakdown of how much you're contributing to your financials. But he said that's a mere nitpicking. It's hard to be anything but optimistic following the earnings call, Potter wrote, while iterating an overweight rating. So that's Piper Sandler. This is Adam Jonas, Morgan Stanley. This is one of the, I would say on Wall Street, probably him and Dan Ives are the king pumpers. So I guess you got three of them on here. They only took two questions from Adam Jonas from Morgan Stanley, and then the Pierre guy. I can't remember the name of his firm that he's at. But I don't see Pierre's notes here, but this is from Adam Jonas, Morgan Stanley. Adam says, this was coupled with an impressive EBITDA margin, which reached its highest level since the second quarter of 2023. Due to the record low cost of goods sold per unit. Additionally, Tesla's free cash flow was substantially higher than anticipated, despite substantial capital expenditures. So that part is in the SEC filings. I looked through it. It looks like their CapEx is also going up. It's in their balance sheet stuff as well. But here he's saying it's interesting that, he's even making a note of it, that their free cash flow is higher, even though you're spending a whole bunch more on your company. So this is the stuff that, this is a pumper guy to where, when I look at the numbers myself, just some things didn't really make sense, but it is what it is. Also says here, moreover, Jonas acknowledges Tesla's guidance for a modest increase in deliveries, okay? Modest increase in deliveries, and this is one of their big promoters or pumpers, which suggests a potential record high for fourth quarter, okay? The company's strategic plans to launch more affordable vehicles on new generation platform for the first half of 2025 also address investor concerns about future growth. Regarding the new platforms on the earnings report thing, it didn't say where they're going to build which car. So the Cyber, a Cyber Cab or the Cyber Van, it just didn't say. So I don't know where they're building them and what kind of plans in terms of how many. He just said first half of next year, and then in volume by 2026. That was on the Cyber Cab. So it's funny how he's saying that he's just talking about, they're going to build it by 2025. But again, you're hearing different points of views where the other person said they'd never build a new car under a year. This person says here, this Adam also, furthermore, Tesla's energy generation storage segment is expected to more than double, with gross margins significantly improving, reinforcing the company's potential for long-term success and justifying the buy rating. Here's Edison Yu. He's an interesting person because we read a report from him prior, I don't know, maybe a month ago or something, and he was projecting Tesla's worth, fair price or whatever, if Tesla sells Optimus robots at $50,000 a pop, which is pretty ludicrous. Even Elon is like, we're going to try to sell these for 30, but he was saying, they're going to sell a whole bunch of these things at 50K a pop. And this is what he's saying today. So again, and take this with a grain of salt. It's a Deutsche Bank, Edison Yu, was encouraged by the volume discussion. Looking at 2025, management provided an initial outlook calling for 20 to 30% volume growth year over year, materially above our consensus expectations, right? So there's oh my God, Tesla told us, more than we expected. Awesome, 20 to 30% growth. While we won't give full credit to Tesla for achieving such levels, meaning that we don't necessarily agree that they're going to do that, but they can say that. This should alleviate concerns about trajectory next year. So Elon said, trust me, bro, and we're going to decide to trust him. Well, that's what Deutsche Bank says. CFRA, this is Garrett Nelson. Expectations were low heading into the release after 4 consecutive bottom line misses and a robotaxi day that left investors with more questions than answers. This person is saying its current valuation is, quote, fair, and it puts a hold on the stock. Baird analyst Ben Kahlo, this person says this is a buy rating, and he said he mentioned Tesla's strong profit margins, calling results positive, and that the note that the company's on track to launch a new lower price vehicle. And he's actually kind of interesting. He says in the first half of 2025, he expects, or actually they're going to launch a new vehicle in the first half of 2025, but by the end of next year, he thinks that they're going to have 25,000 Cybercabs, I guess, sales. He projects $25,000. Yeah. So the cheap car, 25,000 in, like, not just the price, but 25,000 cars sold, I guess, by the fourth quarter of next year. So I think that would be very, very optimistic. Maybe they sell 100 of these things. Who knows? But to be fair, that's what he says. That's coming from Baird. $25,000, the robotaxi will sell 25,000 vehicles by the end of next year is what he says. Okay, Jeff Osborne, TD Cohen, they say, however, they are cautious on the rating. I think there's a hold probably for them. Also considers several challenges that Tesla faces. Regulatory issues could hinder the deployment of fully unsupervised FSD, right? You got to get it through the regulators, and Elon was saying California and Texas, right? So they're saying that could hinder them. And there is an expectation that gross margins will decline due to increased price discounts, right? So Tesla has been cutting prices. So, what's that going to do to your margins? Furthermore, while Tesla plans to introduce more affordable vehicles, there is no immediate plan for a highly anticipated 25,000 model. I think he's referring to like just their standard vehicle, not the cab, which could limit market expansion in the near term. These mixed signals contribute to a decision to hold. This is Tony how do you say it? Sakanagi from Bernstein, and he's put in the sell rating, but I'll tell you why. Has given a sell rating due to a combination of factors impacting Tesla's current and future business prospects. One of the primary concerns is the anticipated decline in Tesla's operating margins in upcoming quarters. So they say the next quarters are going to be weaker, despite a recent boost from deferred revenue recognition and regulatory credits. So the deferred revenue stuff, that's the stuff where I think there may be some shady accounting going on with that. So that's, anyone who follows this stuff, you know, there's a bunch of different things going on. So, and if you're on the inside, please let me know. The CFO did resign. So, chances are that they got an NDA and they're sitting happy on their stock options. So they're not gonna say anything, but, there could be some shady stuff going on. I've mentioned before and I'm just mentioning again. So deferred revenue things. While Tesla's gross margins surpass expectations, they still lag behind some of its competitors in US and Europe. Furthermore, the company's optimistic unit growth projections for the coming years are met with skepticism, right? So a little bit too optimistic there, due to uncertainties around the production and market reception of new lower cost models, right? So how are you going to make these things? How's the market going to receive them? And, and as I said, I think that one guy's projection was saying, well, not projection, just history of Tesla. They don't put out a new vehicle right away. It usually takes over a year. Tony also says here there's doubts about Tesla's valuation, right? It's just priced too high, which appear to be heavily rely on the success of future technological ventures such as full self-driving capabilities and humanoid robots. So we're valuing this company on future stuff, right? Not necessarily stuff that's here, future stuff. Given the challenges in achieving these technological milestones and competitive landscape with the established players like Waymo, Saganagi questions the embedded value of Tesla's non-automotive segments. Reports highlight the speculative nature of these ventures, suggesting that Tesla's current market valuation incorporates significant risk and warranting a sell. Here's one of the biggest pumpers, Dan Ives. He goes on CNBC all the time, and he always tells you how awesome Tesla is. And it's funny because someone mentioned he kind of sounds like a stoner, and I hadn't really thought. I know he has this kind of strange accent. I hadn't thought of yeah, man. So It's funny now that someone said that I'll never get it out of my head. So Dan Ives over at Wedbush, I won't read in the Dan. I guess I could read in the Dan Ives voice because it's funny. Aaron Judge, man, margin performance. That's what we said. Aaron Judge like margin performance. So from Dan Ives in a Wednesday report. So I guess we're gonna monster earnings just like the. And Aaron Judge just plays for the Yankees. You guys correct me. I'm pretty sure it's the Yankees. Operating margins. Okay, operating margins, man. They came in at 10.8%. Up 4.5 point. I'm not doing a good Dan Ives, am I? Up 4.5 percentage points from the second quarter. Up 3.2 percentage points year over year. And then this is more Dan Ives. The Bulls will cheer this quarter in a much needed margin boost after a choppy 2024. We have a buy rating at $300. Okay, so that's my best Dan Ives impression. I'll have to work on that one. If you guys ever hear Dan Ives speak, he wears, no joke, he wears colorful suits like pinks and purples. If you follow a prior video, he went to the Tesla event. He had different color shoes. It literally is a clown suit. Like how clowns wear kind of like funny colors of it. That's how he dresses. It's actually pretty funny. It just when you put it all together, it's funny. And he's always telling you how awesome it is. But yep, Aaron like judges. Now, this was actually my favorite sort of analysis of Tesla valuation, what's a fair price, etc. This was actually coming from Financial Times, and they were just doing some basic logic, which I like to do on the channel with you guys. And this is what they said. They said, well, here's the headline. Tesla is not a car company, but it does a good impersonation. So look closely at Tesla's 750 billion valuation, and it starts to become clear that cars play only a bit part. Assume Musk can make 6 million vehicles by 2030. They sell and it's putting the numbers together. So 6 million vehicles by 2030 that they can sell for 35,000 each, and investors value a good car business at twice forecast revenue, right? So again, 6 million vehicles by 2030. Your average cost is like 35K, and then if you value a decent car company at 2 times revenue, then the highest multiple Toyota commanded, right? So it's essentially comparing it to Toyota. That would suggest Tesla's car business is worth 420 billion 6 years from now, or 240 billion today. To put that in perspective, I think Tesla's valuation as of today should be around 700 or 800 billion, something like that. You guys can let me know exactly because the stock is up quite a bit today. But basically, you're saying if you think that Tesla can make 6 million cars, sell them for 35K each, rate it the same, rate as Toyota's highest valuation metrics, then Tesla's car business would be worth 420, right? Or that's in 2030 numbers, or in today's value, 240. So this is where it's right. So because remember, do the math here. If say Tesla's valuation right now is like 800, and if you're valuing again the car business for Tesla like 240, 250 or whatever, you're still missing another 500 billion. And like a fair value, like how do you come up with that? And so this is what they say here. They says that leaves more than 500 billion unaccounted for. Yeah, so their math's about the same as mine. That leaves more than 500 billion unaccounted for. Batteries make up a chunk of it, right? So I guess theoretically they can make much money on the batteries. So might the self-driving taxis that Musk touted in an underwhelming live event this month, in the future, he says all the company's vehicles will be one giant autonomous fleet, but it's hard to say what that version of Tesla is worth since it is yet to exist, right? It doesn't exist, so how do we know what it's worth? And the cost of building it is decidedly unclear, right? How much does it cost to build this thing? When's it coming? It doesn't exist now. What's it going to be worth? Does the market want it? All this kind of stuff. So like I said, a fair value, and this is just on their car business, you could say that it's 25% of what it's priced at now. And then you got to figure out, okay, what about the other 75% or something like that? And if you believe it's robotaxis, how do we even, rate that? Also says here, then there is Optimus, the humanoid robot that Musk believes could be worth at least 10 trillion, which is, that would be 3 times the value of Apple. 10 trillion, 2.2 to 3 times the value of Apple. It could be worth at least 10 trillion in long-term market value. In other words, at least 13 times more than the whole of Tesla today. So depending on the math, I said maybe, Elon was going for 10 times, but he's, Financial Times saying no. Elon's saying more like 13 times, but you get the idea. Is that plausible? Impossible to say, but it brings home the real point about Tesla, which is that at 750 billion, It is largely an investment in Musk's imagination. While the likes of Volvo, Volkswagen, General Motors battle to sell cars, Tesla sells chutzpah, and investors are still buying. So that's the question I pose to you. Are you an investor in Musk's imagination? If so, you're all about the stock. If you don't believe in Musk's imagination, you're probably selling, holding, or thinking like, why is anyone even bothering with this thing? I'll tell you why. It's very entertaining to cover Tesla all the time because it is just it's a fascinating company, CEO, and it's mixed in all kind of things. Because you guys know there's a lot of extracurricular activity that Elon Musk does. Which, guys, when I talk about this stuff with you, because sometimes people say, "Oh, you're just a hater because of blah blah blah." No, actually, I take these things separately, meaning that I'm looking at the car company just as what they do, what they sell, etc. I look at the extracurricular stuff as just being major distractions, and for most companies, they would fire the CEO by now because it's just like, what the heck are you doing all the time? If you want to, do all these wonderful things at companies, stay there. And then you have all the sort of like the really oddball stuff that happened in the earnings call. I can watch my last video of that. I actually made a couple of the live stream. We can see we did a panel discussion right after. Please watch that, guys. It's good. And then we did a summary. Yeji and I went through that just in the prior video. So this is what Wall Street's thinking. I showed you guys the price targets. I want to hear your thoughts. And do you want to invest in Elon's imagination? Thanks for watching, and I'll catch you all in the next video.